Patriots, baby.
And he's on the dog. And he's on the dog.
It is real.
And he's on the dog. And he's on the dog.
Hold your ears, folks. It's showtime.
Gonna like this. I'm enjoying myself on social media, listening to WSTV. While y'all browsing, check us out. WSTV. Show love, we show love back. Shout out Inky Mann. Let me like his. He got a great show. Big shout out him. God bless him. That's what we doing. You know, we trying to do innovation. Blacksmith. Big shout out him. Always got to show love. You know what I mean? Yo, check us out on the Facebook app. Coming soon. It'll be on Instagram too, boy. I want to share this video to the world, to our listeners, that, you know, it just got real. One of the first stations to be integrated in the Facebook app. Peace, love, and happiness. Yeah.
What up, what up, what up, what up? Get your boy. Big shout to my man Mega Spins over, I do believe this, WSGZ. If I'm wrong, P, put your link down below. Alright? And I'll make sure to correct that. Anyway, big shout to my man's. He has his own show on Spreaker where he debuts music. He does music himself. I remember him from back in the day. So he shows love, I show love, just like he said in the video. Appreciate you, P. So, with that being said, see, these are the things that I'm talking about. These are the connections that I need to make in order for me to be able to I gotta tell you, since I started this whole journey, man, there's been some interesting things happening, and I'm bubbling inside to try to reveal them. But in order for me to be able to have some consistent content, I gotta spread it out. So I will be making you aware of what's going on. But I will say, again, I've been making some serious connections here. I've been talking to some people who are really interested in what it is that I'm doing here. I've been gathering mentors for different things that's going on. So it's great, man. I'm having a great experience with this. All right, so let's go ahead and get into the topic. So this particular topic is, we're talking about tax advantages. All right. And I'm gonna go right now. Let me, I have to do this for those of you who are new to the program. You're new to this show. This is your first show, and you need to go back to the other ones. What's going on is I'm on a goal to try to retire at 50. I'm 49. I turn 50 next year in February on the 1st. So I'm using this book, Cash Flow Quadrant, to use as a foundation and use other tools and relationships and things like that to see if this thing can work. And let me tell you something, it's gonna work. It's gonna work. So here we go. Robert Kiyosaki talks about tax advantages here, and I think that I think it would be better if I went ahead and broke into what he's saying, and then I got some other things to kind of expound on what he's saying. So let me read this passage here. So for people who earn their income from the E quadrant, there are virtually no tax breaks left. Today in America, being an employee means you are a 50-50 partner with the government. That means the government ultimately will take 50% or more of an employee's earnings, and much of that before the employee even sees the paycheck. When you consider that the government offers you tax breaks for going further into debt, the path to financial freedom is virtually impossible for most people in the E and S quadrants. I often hear accountants tell clients who begin earning more income from the E quadrant to buy a bigger house so they can receive a bigger tax break. While that may make sense to someone on the left side of the cash flow quadrant, it makes no sense to someone on the right side. Who pays the most taxes? The rich do not pay a lot in income taxes. Why? Simply because they don't earn their money as employees. The ultra rich know that the best way to avoid taxes legally, let me say that again, the best way to avoid taxes legally is by generating income out of the B and I quadrants. If people earn money in the E quadrant, the only tax break they're offered is to buy a bigger house and go into greater debt. Taxes are unfair. I often hear people say it's un-American not to pay taxes. Americans who say this seem to have forgotten their history. America was founded out of tax protest. Have they forgotten the famous Boston Tea Party of 1773? This rebellion sparked the Revolutionary War and was all about taxation. Taxation without representation. This rebellion was followed by Shays' Rebellion, the Whiskey Rebellion, Fry's Rebellion, the Tariff Wars, and many others throughout the history of the United States. I wasn't big on history. I didn't like it. I was failing in that class. But as I get older, I understand why you should understand or why you should know your history. Because if you don't, as they say, you're doomed to repeat it. So let me go on. The story of William Tell is a story of tax protests. That's why he was forced to shoot the apple off his son's head. He was angry about taxes and refused to bow to the tax collector. His punishment was to put his son's life at risk with a target on his head. And then there was Lady Godiva. She pleaded with her husband, the Earl of Mercia, hopefully I said that right, Mercia, to lower taxes in her town. Her husband said he would lower the taxes if she would ride naked through the town. She took him up on his offer. So here we go, tax advantages. Taxes may be a necessity of modern civilization, but problems arise when taxes become abusive and mismanaged. As millions of baby boomers begin to retire, they will shift from the role of taxpayers to retirees and Social Security recipients. There will be a need to collect more taxes to support this shift. Lastly, a big mistake. A news reporter once asked me how much money I made during the prior year. I replied, approximately $1 million. And how much did you pay in taxes? He asked. Nothing, I said. Let me say it again. Nothing, I said. Now that's Robert Kiyosaki saying he doesn't pay taxes. There's a book admitting that he doesn't pay taxes. That money was made in capital gains, and I was able to indefinitely defer paying those taxes. I sold 3 pieces of real estate and put them through a Section 1031 or 1031 exchange under the U.S. Internal Revenue Code. This man is in a book saying he sold real estate, which meant he made money, and through a loophole called Section 1031 from the IRS code, he deferred paying taxes, meaning he moved them. And he said indefinitely. He did this indefinitely, so he moved his taxes away so that he doesn't have to pay them now or indefinitely. Whew. Okay? I never touched the money. Let me say that again. I sold 3 pieces of real estate and put them through a Section 1031 exchange under the U.S. Internal Revenue Code. I never touched the money. I just reinvested it into a much larger property. A few days later, the news reporter ran the story. Headline read, "Rich man makes $1 million and admits to paying nothing in taxes." Now you would probably run with that same thing from what I'm saying right now. I did say something like that, but a few choice words were missing which distorted the message. I don't know if the reporter was being malicious or if he simply didn't understand what a 1031 exchange is. Whatever the reason, It's a perfect example of different points of view coming from different quadrants. As I said, not all income is equal. He said that earlier in the book. Some income is much less taxed than others. And that, ladies and gentlemen, is why we're talking tax advantages. Okay? Because not only, there's a few people that I follow behind things like this, a few wealthy people who have put out books. This is one of them, Grant Cardone, and other people, but I'm going to point out those two because they're dealing with real estate and wealth. Okay? Wealth, not generational wealth, wealth. And there's a reason I said that, and if you want to know why, just ask me below why I said it like that. Anyway, so with that being said, again, what he's pointing out is there's ways that you can go around paying taxes. You don't have to pay taxes if you do the right things. If you are, like in the last show, financially intelligent. If you are financially literate. Okay? Now, we're not taught financial literacy in school. You have to learn that out on your own. Usually, you have to go through some sort of accounting or something that has to do with business, but again, going back to accounting for the business. In order for you to understand money tricks and how money works and how you can manipulate money and how you can manipulate taxes and how you can put tax strategy together, you got to know numbers. You got to know how to read a financial statement, i.e. a profit and loss statement or a balance sheet. Things that I'm learning myself. I know how to read some of that for the most part, but if I were to sit down and try to teach you and all that stuff, there definitely would be some things missing. So maybe later in this journey, I can find someone to explain that to you. All right? But with that being said, I found a few clips and things like that. Well, let's go ahead and get right into them. Let's start with Wikipedia. Okay, so Wikipedia says tax advantage refers to the economic bonus which applies to certain accounts of investments that are by statute tax reduced, tax deferred, or tax free. Examples of tax advantage accounts and investments include retirement plans, education savings accounts, metal savings accounts, and government bonds. Governments establish tax advantages to encourage private individuals to contribute money when it is considered to be in the public interest. Whew. A lot to chew on that one, huh? Okay, let's get into some of these advantages. Now, this is a definition from Investopedia. What is tax advantaged? The term tax advantage refers to any type of investment, financial account, or savings plan that is either exempt from taxes, tax deferred, or that offers other types of tax benefits. Examples: municipal bonds, partnerships, UITs, and annuities. Tax advantage plans include IRAs and qualified retirement plans such as 401ks. All right, so these are some takeaways here. Okay, tax advantage refers to favorable tax status held by certain qualified investments accounts or other financial vehicles. Examples: municipal bonds, 401ks, 403bs, 529 plans, certain types of partnerships. Tax deferred status means that pre-tax income is used to fund an investment where taxes will be paid at a later date and at tax rates at that time. Tax exempt status uses after-tax money to fund investments where gains or income produced by them are not subject to ordinary income tax. Catch that last statement? Let's move on. Understanding tax advantage. Tax advantage investments and accounts are used by a wide variety of investors and employees in various financial situations. High income taxpayers seek tax-free municipal bond income, while employees save in retirement with IRAs and employer-sponsored retirement plans. The two common methods that allow people to minimize their tax bills are tax deferred and tax exempt status. The key to deciding which or if a combination of both makes sense of you comes down to when the tax advantages are realized.
Realize? What you mean realize? Meaning like you realize that's what the hell you doing?
No, my brother. Realize means when you actually make it real, when you actually put it into perspective. In other words, if you used an investment vehicle now, When are you going to cash it out? When are you going to do something with it to make it real? That's realize. Let's move on. Tax deferred accounts. Now this allows you to realize immediate tax deductions on the full amount of your contribution, but future withdrawals from the account will be taxed at your ordinary rate. The most common tax deferred retirement, traditional IRA, 401k plans in Canada, registered retirement savings plans. Essentially, as the name of the account implies, taxes on income are deferred to a later date. Now, look at this for example. I'll let y'all talk amongst yourselves. You understand it? You have a question about it? Tax exempt accounts. Tax exempt accounts, on the other hand, provide future tax benefits because withdrawals at retirement are not subject to tax, since contributions into the account are made with after-tax dollars. There is no immediate tax advantage. Examples would be the Roth IRA, Roth 401k, and in Canada, the tax-free savings account. You contribute. Now, I'll let you read this if you contributed that part there. Go ahead, read that. Talk amongst yourselves. But let me get down to the bottom. With a tax-deferred account, taxes are paid in the future, but with a tax-exempt account, taxes are paid right now. Now I know I'm going past my usual 10-minute show, but hopefully, I'm still caught your attention. I got one more point to make, then we'll go ahead and we'll wrap this up and get into y'all's day and having a good day. Anyway, let's get back to it right here. Depreciation. Now, depreciation also yields tax advantages for individuals and businesses that invest in real estate. Depreciation is an income tax deduction that allows a taxpayer to recover the cost basis of certain property. In the U.S., the cost of acquiring a land or building is capitalized over a specified number of useful years by annual depreciation deductions. I'll let you read the example here. Talk amongst yourselves. Do you understand it? Do we need to talk about it? Huh? Okay. Now, there's more tax advantages that are out there, and as I see them, I'll make shows about them. But I just wanted to get your mind focused. Know these things, whether you use them or not. You cannot say that you're at least not knowledgeable of them. These are things that you could use to your advantage, but if you're not aware of them, then you just go through the basic struggles. Let me tell you something. Since I've changed my mindset on a lot of things, using credit to my advantage versus cash, using a lot of other things that I have going on, having mentors, having FYK doing my services when it comes down to credit, and actually having some strong consultation with that, which we will be talking with FYK so that you can understand how important credit is. Actually, what made this series even be brought up is something that happened last year when asked about credit. I believe it was last year, maybe the year before, when I was asking about credit. There was so much confusion and all kinds of things that came out of it, and I figured, well, let me kind of expound on that. And I do expect dialogue, I do expect kickback, I do expect a whole lot of things. Great. I'm not upset by that, because I'd rather you speak up because you do not know. I don't know everything. You might have something that I need to look up, and I would love to go ahead and tackle it here on the show, as long as there's some engagement. You understand what I mean? So, with that being said, hopefully you learned a little something when it comes down to tax advantages, and maybe you'll dig a little deeper. Maybe below, you'll point out some that you are aware of that I did not point out on the show. That would be great. Other than that, let me see, what will we talk about next week? I actually had that down. Mentors and why I need them, as well as yourself, why you need them. We'll talk about me and mine. All right. With that being said, happy hump day.
Hump day.
Later.
The time has come for someone to put his foot down. And that foot is me.
Inky Mann.
The time has come. The time has come. The time has time has